What's up, millionaires? Alexander Victor here with another moment of financial zen. More often than not, I'll get requests about investing tips from someone that's new to the game, and it goes a little something like this. Hey, I'm new to investing, and I want to know how I could turn $10 into $1 million as fast as possible, with no risk, tomorrow. Okay, this example is a little extreme, but you get the point, and you know exactly what I'm going to say next. It's absolutely possible. All you have to do is sign up 2 people and get 3 people to sign up under those 2 people under this brand new MLM. It's not a pyramid scheme. Okay, seriously, I'm here. I'm going to help you guys ease into the world of residual income and break free of the paycheck to paycheck, the 9 to 5, the redundancy, and eventually build real generational wealth. So your grandkids can complain about how unfair it is that they never had to endure the struggle and they now have to sell their Instagram post for $1,000 a post. Stick around for my price prediction of plug power at the end of the video. First, let's go over some basic terms. Investing. Investing is using your money to buy assets, not liabilities. Assets are things that make you money. Liabilities are things that don't make you money. It's very important to know the difference. Let's view some simple examples, and you tell me what you think they are. Having an apartment, asset or liability? Liability. If you live in that apartment and you don't own that apartment, it's 100% a liability. You are helping the landlord to pay their mortgage, and they're making money on top of you, and they get tax breaks because of it. Move out. But this wouldn't be Zenvest unless I helped you figure out how to turn that liability into an asset. So here's how you do it. Start a home business. Buy stuff at a local outlet mall and sell it online at a markup. Buy things off of Amazon and leave a video review. Then post it on YouTube and use the affiliate links. Buy stuff in bulk from Alibaba and sell them on Amazon. Then when tax season comes around, you could claim your home as a home office and get a write-off based on the cost that you pay in rent. Second one, house. Asset or liability. House is generally considered an asset, especially if you have a tenant. Imagine your net worth represented by a fence. And on the left side of the fence is what you own. And on the right side of the fence, it's what you owe. As you pay off more of the principal, what you owe becomes what you own as it crosses the fence. This is called equity. Additionally, the left side of the fence minus the right side of the fence is your net worth. Over time, your house will raise in value and equity based on how much you pay plus the market value of your home. How much you sell your home for today compared to the homes in the area. However, a house can be a liability if the repairs outweigh the cost of the home. The homes in your area are losing value, or you stop paying mortgage and the bank forecloses on your home and then takes your home back. All right, third one, car. Asset or liability? A car is definitely a liability, especially if it's leased. You keep zero value of the car at the end. If you buy a car, it depreciates. That means the value of the car goes down the longer you own it. You will almost never make money from buying a car which you bought it out originally. But you can turn this into an asset. This is how you do it. You can get a collectible car, a classic muscle car, Japanese sports cars from the 90s, pretty much anything that you see on Fast and Furious. Keep them for about 10 years, very low miles, stock as possible. You can sell them on my app, OBO. In 10 years, these cars will be worth 5 to 10 times what they're worth today. The second way is to buy a Tesla. Tesla has technology installed on every car called V2G, which stands for Vehicle to Grid. This turns your car into a money-making machine, which buys power when it's cheaper during the day off the grid and sells it back at a higher price when the grid kilowatt hours per price are higher. Effectively turning the electric grid into the stock market and your car into a trading bot. Don't worry, your car knows when not to sell too much because it knows exactly how much power it needs to get you to work and back home the next day. All right, number 4, clothes, liability. 5, shoes, liability. Unless you get them as collectibles, or we call commodities. Keep them in a box, don't wear them for 10 or more years. and they might be able to turn a profit. 6. Stocks, of course, are an asset, but can become a liability if you decide to YOLO your life savings on penny stocks. Stick with growth investing for the majority of your investment. A stock is a tiny portion of a company that you own. If you own a stock of Apple, you own an actual portion of Apple. You are now an owner, which means you're entitled to Apple's profits. You can receive these profits in 2 ways. The first way is directly via dividends. Second way is indirectly via equity. One of the biggest misconceptions when people are buying stocks is they think that they're losing money. This is not exactly true when you're in fact converting your cash into equity. If you buy a stock for $20 at market open and it sells at the end of the day for $20, the price is $20 and you'll receive $20 cash back. This transaction takes seconds, and if the stock goes to $21 by the end of the day, well, your equity raised to $1, so you made $1. Do yourself a favor. Don't think of stocks as buying a product. Think of them like putting your stocks into a different savings account, like a savings account on steroids, and a savings account that makes you money. And the longer you keep it there, the more it rewards you. Just keep it there for the long term, and don't be weak-handed. All you have to do to get on this is invest in that like button and subscribe and hit the notification bell. No, really. All you have to do is check out my next video for the 4 steps to financial freedom. I'll leave it at the link at the end of the video. Now it's time for my pick of the day, ticker symbol PLUG, Plug Power. This company makes liquid hydrogen fuel cells, likely to come up right alongside the EV economy. They are the largest providers of hydrogen fuel components. These fuel cells are promised to outlast the EV batteries when it comes to long-haul uses. The biggest challenges as an industry is the fuel stations, as we are still in the early stages. I definitely think these guys are going to take off in the next decade. This is a long-term hold. $1,000 today at $62.50 will get you 16 shares. Bear case, $80.03 a share, 28% return at $12.80. Bull case, $340 a share, gets you a 444% return. That's $5,440. And my calculator predicts at a 95% confidence level a return of at least 171% by December 2021, turning your $1,000 into $2,707.28. So should you buy? That's for you to decide. Do your research, ask a paid professional for their thoughts, and leave your answer in the comment section below. If you want to know how I got these numbers, hit me up on the Zenvest Discord. I'm also going to leave that in the description below. And remember, invest in yourself. Your future depends on it.